I was just reflecting on my journey as a Bitcoiner because I've been a big advocate for, and I guess part of my energy comes from Bitcoin itself is amazing. But what is actually as amazing, arguably more amazing, is what it does to Bitcoiners. It changes people's lives, the way we think about things. And if we just wind back the clock 2 years, 3 years, definitely 5 years, the whole world was structured and geared to tell you that you were wrong. In order to actually develop conviction in Bitcoin through 2018, 2019, 2020, it was a bit easier in 2021. Try doing it in 2022. Holding and building the conviction in that time when the systems that be wanted to kill it, and they wanted your family to tell you that you were wrong. They wanted your friends to tell you that you're wrong. They did tell you were wrong. And yet you're still stuck with this thing and kept buying it? What, are you insane?
Hi, James.
Hello.
Hi, John. Johan.
Yeah, welcome back, everyone. Today it's episode 33 of the Store of Bitcoin podcast. We're recording on August 18th, right around block height 910,600. Today, we're thrilled to be joined by a true trailblazer in the Bitcoin space, James Jack. James began his journey in civil engineering, but in 2021, he brought that analytical mindset into the Bitcoin world when he joined Glassnode. There, he made a name for himself in Onchain Analytics. Fast forward to 2024, and James is now running his own company, delivering razor-sharp insights powered by data, and especially the on-chain metrics that help reveal the hidden rhythms of the Bitcoin market cycles. Many in the community would say James is already at pre-GOAT status. He has developed framework that countless analytics and analysis rely on today, and co-authored Cointime Economics with David Puel. And yet feels like he's just getting started. His contributions are still unfolding and poised to redefine the field. For Bitcoin enthusiasts navigating today's turbulent markets, James has been a steady anchor of reason, grounding us with level-headed analysis amid the hype and volatility. Beyond that, he's a masterful writer and thinker, blending technical depth with real-life experience as Bitcoin holder. James, thank you so much for joining us.
Man, that's such a kind introduction. I used to refer to myself as just a bloke on the internet. So that's I've come a long way, apparently.
Yes, for sure. And of course, a warm welcome, as always, to our own Alessandro.
Hi, Johan. Hi, James. Nice to be here. I'm looking forward for this great conversation.
Alessandro, I don't see you. Maybe you're still in backstage mode, or I don't know. James, can you see Alessandro?
Yeah, I can see him. You are a little bit quiet though, but otherwise all good.
Yeah,
Okay.
yes.
All right, sorry. So, James, before we talk about markets, I want to start off with a recent tweet of yours about conviction. You know, I think it was 1 week ago, and you wrote a tweet about that people who were here for longer than one cycle, they experience a once-in-a-lifetime event.
Yes.
And I think for me that really resonated. And I think there's two parts of the tweet that really, I think, has a lot of signal. And the first part, you need to create conviction. You need to perform critical thinking. And the second part is also learning to trust yourself, to follow that gut instinct that come out of the critical thinking. So maybe you can elaborate on that.
Yeah, absolutely. So this was just an idea that I think I've thought about a few times, but sometimes an idea just becomes crystallized in your mind. And I was just reflecting on my journey as a Bitcoiner because I've been a big advocate for, and I guess part of my energy comes from Bitcoin itself is amazing. But what is actually as amazing, arguably more amazing, is what it does to Bitcoiners. It changes people's lives, the way we think about things. And if we just wind back the clock 2 years, 3 years, definitely 5 years, the whole world was structured and geared to tell you that you were wrong. In order to actually develop conviction in Bitcoin through 2018, 2019, 2020, it was a bit easier in 2021. Try doing it in 2022. holding and building the conviction in that time when like the systems that be wanted to kill it, and they wanted your family to tell you that you were wrong. They wanted your friends to tell you that you're wrong. They did tell you were wrong. And yet you're still stuck with this thing and kept buying it? What, are you insane? Like, if you really think about all of that being just against you, for people to actually get across the line and be like, no, you're wrong. Stuff you. I think that you're wrong. And like mentally think that and probably verbally say that to a lot of people. That's a once in a lifetime opportunity, because if you look at the landscape now, that's gone. We will probably never see that kind of hostility again. It's going to be a lot more subversive, but that's a whole different topic. But if you really think about it, that world, to have built the conviction in that environment, you have to trust your own thinking. And I can't think of another example. Like, there's going to be things like, AI, and there's certain things that some people go, oh, that's never going to happen, or that's the next horse and carriage versus, flying spaceships or whatever. But at some point, that period ends. And if you built the conviction in that time and you trusted yourself, your own thinking, you can't replicate that. So in my view, if you've been around Bitcoin for more than a cycle, be very thankful, because your peers that come in after you, they will never understand what it took to build that kind of conviction. They actually can't ever understand it, because you have to live it. You have to walk that walk. You can think about it just like you can learn about history and appreciate history. But if you haven't lived history, that's a whole different thing. This is why humanity repeats mistakes. So I think it's a really interesting concept. And I think that if you have been around for a cycle or more, be very grateful you got to live that experience, because it is a once in a probably multi-generation event that you got to live through, and really do the most with it you can, because you actually have a gift now. You've got that experience. Use that to make your life better, to make your family's life better, and to make Bitcoin better, right? That is a great power that you have. Use it to the best of your ability.
Yeah, I couldn't agree with it more. And especially the cycles that still has to come maybe won't have the same the same magnitude, the same impact like the others did. So I think there was probably once in a lifetime opportunity. Yeah. So James, after so last week we had a new all-time high. Currently we're back at, I think, $115,000. We had this air pocket between 112 and 116. You wrote about it. We did spend some time there, but it looks like we're going to revisit this area. The short-term holder cost base is still close to $109,000. Is it still okay to remain bullish?
Yes, very good question. And literally, I finished with like 1 minute to go. I've just finished writing a piece. So once I finish wrapping up here, I'll be issuing that one. So stay tuned. I wrote a piece looking at the demand side, and the demand side is very interesting because it's not quite as pretty as you would hope. So on Friday, we had the all-time high break, 124, and then we've pulled back. And the pullback was kind of nasty. It's kind of an angry candle. Now, if you spend enough time around price charts, you know an ugly candle when you see an ugly candle, and this is an ugly candle. It's a sign that we didn't have the demand. So I wrote a piece diving into what's going on with the ETFs, what's going on with the Treasury companies, what's going on with like cash and carry trades, trying to get in the weeds of like what are the big sources of demand. And I won't spoil it, but it's not as pretty as you would hope. But also, like, demand comes and goes. We've got to remember that like it's going to take a lot to slay the bull. So it's very much a piece of two parts, which is looking at the demand side and being like, it's a bit okay. And then looking at the Bitcoin side, be like, yeah, but I'm actually not that worried about that either. So like you've got both sides. Like I think Bitcoin's in a fine position, but the demand sucks. So you kind of have to balance both of those. And like really at the end of the day, it's got to get a lot worse before you start getting like outright bearish. So the way I would structure it, I'm still structurally bullish, but in the immediate term, tactically, yeah, probably not so bullish right now because we just don't have the demand that you're expecting, that you would hope to see. And it's a topic, you can go down there if you want, but the Treasury companies, there's also a lot of fugazi going on. The demand ain't so much of demand. It's a lot of, I'm going to move 30,000 Bitcoin from my left pocket, put it in my right pocket, and people think that I bought coins. It's not really as pretty as under the surface when you really start digging.
Yeah, okay. So I'm gonna let Alessandro ask the next question, but I want to get back later on the treasury companies and especially on micro strategy.
Before going to the next question, I would like to go back to your first point, James. It was a really great post, and also because I feel also involved because I was among the person that you mentioned. And I started to listen to hear about Bitcoin 2017, 17, not 18. You know why? Price was going up. Bought in 2017, sold, didn't know about so much, also because not so much material, sold in 2018. And then I built the conviction exactly 2020, 21, and 22. And I can confirm 2022 probably was the hardest year.
Brutal.
They throw at us is a Ponzi scheme, bubble used by criminals, no value, not backed by anything. And the peak was when FTX collapsed, and also the European Central Bank, he said Bitcoin is embarking the road of it will not count anything.
Like irrelevance or
was
something,
epic.
right?
That was
It
like
was the bottom tick. Bottom
Yeah.
tick.
November 2022.
Get
And
ready.
I agree that this was a one in a lifetime or multi-generational cycle, because the cycle of 2017, firstly, Bitcoin was too new and there was not so much material. But in the cycle 2020, 2022, there was the book from Safedin, Saylor and Breedlove podcast, plus Antonopoulos. And we all had the chance to learn, only few did, and then we keep buying in 2022. My reflection is also this going against the crew, and be very interested on like joining Bitcoin world because of being very interested about Bitcoin. Probably it's gone because most of what I think from now on till the next 10 years, people who will join will be mostly because okay, these Bitcoiners are getting richer and richer than the others. Bitcoin is going up and up. It is recognized financial from institution, ETFs, BlackRock. So there was only the chance in last cycle. There will not be any more this interest that we had in the past.
Yes, it's going to be more passive is probably the right term, I think, because you'll get a lot of people who would just get it stuck in their investment portfolio, stuck in their retirement fund. They just go, oh, you just give me like 2% of that, or like, yeah, I'll take 1%. They won't think that much about it, and they certainly won't have the conviction. So, in a lot of levels, that means that the Bitcoiners who are still around and went through that learning journey, for me, I bought the 2017 top. And I would say 2018, I learned about markets, but 2019, I learned about Bitcoin. So 2019 for me, that was because that was like the second bear. For people who didn't live it, a lot of people, in fact, about 50% by my stats, about 50% of people that you engage with on Twitter and the like come from the 2020 and 21 cycle. That was like their main cycle. If you imagine 2022, imagine going through that, having 3 months of up and then doing it all over again. Another one, like just an endless bear. So that period of time, that was hellish because you're just like, I don't think this thing's ever going up again. And then you had March 2020 to cap it off. And you look at this whole thing and be like, what have I done with my money? And of course, you buy the dip anyway. And then suddenly it's moon mission. So no, it is. It's really important to go through that journey and to reflect on it, because I always learn new and different lessons, different things from each cycle. I take as like a memory token of like what actually happened. 2019, I'll never forget that run up from 4K to 14K. I'll never forget it because it was the first time I ever felt pain to the upside, because I realized I did not buy anywhere near enough. And I expected it to be down there for like a 3K for like a year. And of course, it was down there for 4 months and then just straight up. And then FTX, when FTX blew up, the lesson that I took away from that, amongst many others, it was the first time that we had like a cataclysmic event in the industry. And I remember just thinking, okay, the coins are in my cold card. All right, I'm fine. And like, it wasn't actually like a fear. It was more of just like, no, I'm good. I'm good. My coins are not exposed. And that like reminder that self-custody is just so important because I'm unaffected. And I was like, yeah, price, it's an annoyance. It was an annoyance, not a visceral fear. Which I've certainly experienced. In fact, the visceral fear that I remember having, March 2020 was awful. That sell-off was just something else. And everyone who was there for it and watched it it was an amazing event. But the one that I always remember is that mid 2021 in May. We went from like 55K to 29, and it was just this waterfall, and the chart looks fucking horrendous. And you look at this chart, like, it's over. It is so over. And then it bounced back to all-time highs, but it was already so over. So that sell-off there, I'll never forget. But yeah, there's just all these different like moments in time that I'll never forget in my Bitcoin journey.
I remember as well May 2021. Probably it was mostly driven by Elon Musk having a doubt on Bitcoin and energy usage, and so they stopped accepting Bitcoin as payment. And secondly, was the China ban.
Yes.
Probably there will be not any more news that
so
will.
I would put those two. Here's one of my many controversial opinions. I would put those two. They were just the straw. The camel was already ready to go. They were just the final straw. In my best estimate, the reason that we had that sell, and it is a study that is worth being studied. Truly, that like 2021 rounded top. There is so much to learn about Bitcoin market structure there, and I use it all the time to think about this current cycle. What I definitely missed it back then, but the thing that I missed, GBTC went from a premium to a discount. Everyone saw it, but I don't think everyone understood how big that was as an event. That if it happened in February, we had what's called the on-chain top, which is where the maximum sell side, maximum coin day destroyed, maximum profit taking. That was in January. So on that first peak, that was the on-chain top. So you got a whole bunch of old coins come back to market. GBTC premium goes to a discount. Suddenly, all these trading firms are trapped. Whether it's BlockFi, whether it's FTX, whether it's Alameda, whether it's 3 Arrows Capital, all of these guys who came out a year later and blew up, they were having their oh shit moment, and they realized that they're still locked in for another 6 months, and then it got worse and worse and worse. And that was like a 660,000 Bitcoin spot bid that just evaporated overnight. And then on top of all of that, so you've lost your spot bid, you've had all the sell side from OGs, then you had a series of analysts, which everybody knows who I'm talking about, saying that we were going to 100K. And that created so much leverage in the system. I'm not going to blame it on the analysts, but everyone believed 100K. I was in that bucket. I thought it was going higher. I was the idiot as well. I was just too junior, and I can now reflect and say I got it very wrong. We were going to 100K, and everyone put leverage on leverage on leverage. And even more magic sauce, not only was it leverage, it was coin margin leverage. I was actually writing about this today. 80% of all of the futures margin was someone putting Bitcoin or some shit coin and then levering up Bitcoin. So then when the Bitcoin went down, not only did their futures position go down, but the collateral backing it went down. And then the whole thing just imploded. So yes, the China mining ban, and yes, Elon, they were like the straw, but that camel was dead and buried long before that event happened.
Okay, thanks for explaining. Yeah.
It were the snowflakes who not causing the avalanche, but triggered the avalanche.
Yes, I confirm. Right. I was in X started X in 2020, 2021, checking daily, and in October, November 2021, 99 of people were convinced of 100K.
Totally.
By the end of the year or Q1 2020.
Totally. Yeah, it was going to follow the power law of the day. It was going up to 100K, and not so much. We went to 29.
Yes. We move now to the next question. Is on on-chain metrics. Which on-chain metric do you find the most reliable when gauging the health of Bitcoin market?
It's a great question. So I have two that are my Swiss Army knives that I use in all weather environments, MVRV and SOPA. And they're actually very simple at heart. They're beautiful because they're mean reverting oscillators. They're basically looking at every single person in the on-chain world has a cost basis. So at a technical level, every UTXO, we can just price stamp it. So because we can price stamp every UTXO, every time you DCA, it's kind of accumulating up to like a global cost basis. Now, we can break it down by like the whole market, people who bought recently, people who bought a long time ago. You can do 1,001 different slices of it, but ultimately, long-term and short-term holders, and truthfully, just short-term holders, it's such a powerful indicator because the short-term holder cost basis is like near-term mean reversion. We just oscillate around it over the next 6 months, 12 months. We're going to oscillate around it. When the market goes up, it's going to follow because people take profits. It follows. When we sell off, then it's going to decline with us. Because it's kind of like a moving average, but it follows a volume weighting. when we stretch too far away from these things, that's what MVRV is. It's telling us about unrealized profit or loss. The higher these oscillators are, the more profit people are in. And what happens when people are in profit? They sell. It may not be you or me, but some guy out there is like, yeah, that's good. That's my swing trade done. I'm going to take my 40% profit and walk. This is just how markets work. So profit and loss, because if it goes too low, people capitulate and go, oh, stuff this, I can't do this anymore. And they sell in a loss. So unrealized profit or loss is the incentive. And that's what MVRV tells us. What is the incentive for people to sell or panic? SOPA is then, did they sell or panic? Are they taking profit or are they capitulating at the loss? And the reason why I love short-term holder SOPA so much, you can, especially in price discovery, which is where we are at the moment, the only people who can possibly buy the top are short-term holders. They are the only ones who can buy the top. So by that very definition, when top holders start selling at a loss and capitulating, I'm a very happy buyer because I know I'm no longer buying the top. Because if those guys bought the top and are now selling the bottom, I'm going to buy the bottom. That's the way that I like to think about things. So it works in all environments. It's great for distinguishing like just bullish and bearish transitions. I've certainly in my time, one of the biggest unlocks for me as an analyst, but also just as an investor, is accepting that none of us know the future. It is such a superpower to just let go of trying to predict shit and just being like, I don't know. I have no idea. But what I'm going to do is try and formulate a view and a series of thresholds that I change my mind if this threshold breaks. So you kind of build up a thesis and say, well, if the market's trading like this, that's what bulls look like. So until it stops trading like this, I'm a bull. And then when it flips over, I'm not allowed to go, oh, well, hang on a second. Maybe it's still a bull. It's like you got to flip because your rules are broken. So as an analyst, those two are just the absolute best because you can use them in bears, you can use them in bulls, you can use them at tops, you can use them in dips, you can use them in everything. They're just an all-around fantastic tool. And one of the really cool things about these metrics, SOPA in particular, it looks just like funding rates. It is purely on-chain UTXO-based data, and it looks identical to funding rates in futures markets. Why? Because when someone's taking profit on-chain in the spot market, some other dude's going levered long at the top. You're getting like a contra signal from two different guys. You're like, okay, so the dumbasses are buying a whole lot of coin at a very expensive interest rate, and the guys who've been around for a long time are selling in a fat profit. Which side do I want to be on? Probably not on the buy side. It's great.
Okay. Yeah, thanks. Interesting about these metrics. It's also a lot related with also human psychology, these short-term holders.
Totally.
Some there, for example, now I experience some who are new joiners or they think to join. First, they say they didn't want to join at 80K because they were waiting lower.
Yep.
And now Bitcoin is above 110K. They say, oh, you were right, but now it's too late. And then I said, maybe likely you will buy it 140, 150.
I actually went back the talk that I did. It was very funny. It was so we've flown over from Australia to Nashville for the conference last year, which was a spectacle and a half. But anyway, because it's such a pain in the ass to get from Australia to the US, we decided to do a month in Texas. So we made the most of it. But anyway, my talk in Nashville, which was the end of our trip, my talk was on at the same time as Michael Saylor's. And I don't know if either of you were at that conference, but they had Secret Service and all that because they got Kennedy and Trump and all that. So it took people like 3 hours to get into the main hall. So once they got into the main hall, they didn't leave. And I'm on like a side stage. So like no one, it was literally me and 8 guys talking to 8 people in the audience. And one of them was my co-founder. But anyway, the point of this story is my presentation, I took SOPA, which is the metric I was just talking about. And I went back and I overlaid it on my decisions, my actual buying and selling back in 2018. So I've bought the top. It's the first thing I've ever bought. I didn't own a stock. I didn't own anything. I've bought Bitcoin at the top. It's sold off. It goes down to 6K. I sell all of it thinking, okay, don't worry, I'll buy it back. I'll buy it back lower. And then I bring in SOPA showing me being the idiot selling the bottom. And then it bounces. And I'm like, oh no, hang on. My favorite influencer, he's just shown me this new indicator. It always predicts the truth. It looks bullish now because it's going up. So then there's me buying the top at the same time that people are taking profits. And then it sells off. And like I showed my literal journey with my buys and sells overlaid on SOPA chart, just showing like I was that guy. It was literally me. So all I'm doing now, it's all human psychology. I'm just going to do the opposite of what dumb me was doing back in 2018. Learn from your lessons, find an indicator that's like, yeah, that was my dumb self. I'm going to do the opposite.
Agree. Yeah, similar to me, 2017, 18 sold and then build conviction, and then we are here now.
That's it.
We go now to the next question. That likely for price and markets and medium term price probably is the main topic in the Bitcoin world. On the 4-year cycle, now according to 4-year cycle, we should end up at the end of the year, and then should start the bear market next year. In general, if the last 2 cycles, we saw Bitcoin going down -60, -80%, and then between 12 and 18 months of bear market. Which is your opinion for next year? Firstly, we will see a similar cycle again, or how likely will be? And on the other side, if we don't see this as we hope, which will be the most likely scenario?
Yeah, it's a good question. I very much live in the world where I don't know, because it really could go either way. I wrote a piece recently called Time in the Market. And it was basically looking at, like, if we take all the previous cycles and we look at how long this cycle's gone for, where are we at? And the conclusion from like multiple lenses is that, like, if the 4-year cycle is going to remain, we're somewhere between like 30 days and 110 days or something. Like, let's just say like 1 to 3, 4 months away from, if we don't top out like the top in the next 3 to 4 months, then the 4-year cycle has broken. But what's going to happen is it's going to break. We're going to get across that threshold, and then it will top 2 days later, and then it'll be over. But it very much remains. So I just don't know. There's no question this cycle is different, but there's also a lot of stuff that's very much the same. We've got to remember that we're like 100 times bigger than we were in previous, like literally orders of magnitude larger, and we're moving in a very different way. I was just doing a quick calc then. If we go down 80%, that's like 25K. I mean, there's no way we're going to 25K. The amount of people who are going to step in and buy that thing at 20, if it goes to 25K, I'm selling everything I own. So it doesn't, I can't see it happening. Like, again, markets can do anything they want, and, you know, never believe nothing can happen or it can't happen. But like, guys, it's not going to 25K. This is not in my like book of registry. So we're not going to get an 80% in my view. I don't know how we get below $1 trillion market cap. I mean, Bitcoin's $1 trillion asset now. I'm sorry, I'm buying it all day when it goes down there. So that 75 is kind of that zone. I think $1 trillion would be 50K, but I don't think we're going to 50. Suddenly you're just like, I mean, how far can we go down? And that's the thing. We didn't actually go up enough. And this is the thing. We don't have that much demand right now, like in the immediate term. I think it's a little bit softer than we'd like. But I also can't see it going down to Hades either. So like, I'm not that concerned about the downside. If it goes down a little bit, that's fine. That's part of the game. But I don't know, man. Like, I think it's got to go much higher before we can have even a 50% correction. So, you know, there's a lot of interesting dynamics here. But I think the 4-year cycle has a decent shot at breaking. But my base case, my base case is that it breaks to the downside. And what that means is we don't get the bear market everyone expects. So I don't know about the top, whether it's going to be like, there's 2 scenarios, I think. The one that I'm not concerned about is like a crazy euphoric blow off top. You can see those things like a sore thumb. You can't miss them. What concerns me is that the bull just dies with a whimper and just like crawls over, and then that's just the end of it. Like, we've topped already and that's it. It just kind of crawls over. That's harder to spot. That's a much more difficult, as an analyst, that's much more difficult to spot. So that's what I'm looking at the moment. But I think the 4-year cycle breaks because we don't get the big, nasty 80%. Let's just say we go down 40%. Takes a year and a half. Are people going to reset their charts and say, oh, the 4-year cycle just started again if we go back higher? They may not even know. They may not even think to reset their charts. They may just think, oh, it's just one shitty dip. They won't be able to work out where we actually are. And they kind of lose their bearings of like, did the cycle start again? Did it end? Was that the top? Was that the bottom? They don't know. They actually can't ask the question. So I think that's my base case. So in a way, I think the 4-year cycle is broken, but it's probably still going to have some kind of cyclicality to it. And there'll be a lot of people, by the way, who are going to trade as if the 4-year cycle is in play, or they've trained all their algorithms to do this. They've trained their trading bots, or everything is set up to trade this 4-year cycle. So there'd be a lot of people who are just like self-fulfilling prophecy. So yeah, it's good. I mean, as an analyst, it keeps me on my toes and on edge.
So yeah, what if I'm thinking? What if we got that we got that 40% drawdown, and the price? It's hard to pin where the bottom was, but at what metrics are you looking to make up your own mind? And are you looking at like if long-term holders get to a new high, or like 80%? I think 83% is the all-time high for short-term holder supply. Would you say if that would happen, that would be your like bear market bottom?
Yeah. So bear markets have a very different tool set to bulls. Bulls, it's very much about you're looking for a couple of things. Obviously, there's the demand side, which we talked about. Bulls, you're looking for when people are too profitable, and when they start taking that profit, that's creating that sell side. So you've got literally supply and demand. I can see the demand with the ETFs, treasury companies, spot, all that stuff. I can see the sell side, which is driven by the incentive of profit. Bears and dips have a different framework. It's all about who's going to survive. Now, in previous bears, there's a point when you're down 80% that you ain't got no speculators left. There's no one who doesn't believe in this thing carrying that kind of a level. So you're left with only the hodlers. Now, there's a very unique moment at the bottom of a bear. It happens in all markets, but in Bitcoin, we can just visualize it and see it much more. A high volume capitulation, the final down wick. And Bitcoin's actually usually had two of these. One is your classic bottom, the FTX bottom in December 2018, the first major bottom in 2015. But Bitcoin has always had like a second bottom. In 2018, which I'll know, that was March 2020, we go back down to 3K. That was like the final nail in the coffin. If you go back to the 2015 cycle, it kind of bottoms for like 12 months, and then you have this final just waterfall sell-off down to like, I forget the price, like $120 or $250 or something. Horrible volume spikes, and then it's just off to the races. So you need that like final bottom. And actually in 2022, the first bottom was actually when Three Arrows Capital blew up in July. We went to like 17.6. That bottom, everything in the on-chain world started bottoming out from that point. It was very, very clear the bottom was being hammered out from July, August, September. Then we had FTX, and it was like a hyperextension. We just went too far. It was too bad. They couldn't get worse at that point in time. And it's funny because it went straight down, and then it went sideways. And there was a period over Christmas where for like literally 2 weeks, the price traded in a $520 range and did nothing. It's never been so stable. And then it's off to the races. So bottoms have this different characteristic where at those like final wicks, the final bottoms, all the long-term holders who bought at the top and they carried it through the bear, and they hodled and they hodled and they listened to podcasts and they cried themselves to sleep, they finally go, I'm done. I can't do it. This is too much. And you see, like every so often, when I'm just in conversation talking about this kind of event, someone will be like, yeah, that was me at this date. And they'll talk about like the FTX bottom, like it just got me. I just couldn't do it anymore. I was just done. Like they come back in, but there's just that one point when not only you get three things happen. Long-term holders in loss who bought the top, they finally capitulate. Short-term holders, they always capitulate. And then you have one other group. This is like the ultimate bottom signal. Long-term holders in profit, selling at the bottom. That is the absolute magic sauce, because if you get all three, you've got long-term top buyers, recent bottom buyers who are getting shaken out, and the guys who think it's still going lower and they're up on their position. When you get all three of them, perfect. So I don't know if this bottom, the next one where you get a bear, I don't know if it's going to have the same characteristics, because if we don't go down, if we only go down 40%, 50%, And again, that's an assumption to itself. But if we only go down that much, we also have a cohort of people who aren't used to going down 20%. Like 20%, they're calling the Fed saying, bail me out. If we go down 50, like that could be enough to create all the same dynamics. So we may have like softer people, smaller drawdown. It might actually be like a nice balancing act. The unrealized losses may not get so bad. At the moment, I find it hard to think that we've topped because we don't have enough people at the top. There's literally not enough top buyers. So we actually ran out of steam on the demand side, which is probably more like a consolidation in my view. But yeah, lots of stuff to think about. There's lots of metrics. There's a whole different framework for thinking about bears and dips and bottoms. But that's what makes my job and life very fun.
I mean, those are some great insights there. I want to switch topics and go to the Bitcoin Treasury companies with you, James. So I'm writing a bi-weekly newsletter for the Bitcoin layer, and I'm covering the corporate finance side. And so I have an opinion about this matter, but I love your opinion about it. And so let's start with the Bitcoin you referring to going from the left side of the pocket to the right side of the pocket.
Yeah, so I'm not going to point out any particular names, but there are several companies where the Bitcoin, like this is the thing. If you just look at like bitcointreasuries.net and you're like, holy shit, look at all this buy side. A lot of those coins have either been accumulated, like long-term holders. Long-term holders holding a lot of supply is bullish. It's a good sign because it means that they're not circulating, they're not trading, they're hodling. But it also tells you a story of what happened long ago. So when long-term holder supply is going up, it is showing you what happened 5 months ago. And that's good because they haven't sold those coins. They still hold them, but they're not buying them right now. It takes 5 months to get there. So if you're a treasury company and you suddenly have 10,000 Bitcoin and you appear on bitcointreasuries.net, did you buy 10,000 Bitcoin or did a whale hand you 10,000 Bitcoin and say, oh, by the way, if you get the stock price to a 2x premium, then it will convert and then I get the stock. So, and then they're going to sell that and go and buy the Bitcoin. So it's kind of future sell side if the stock performs. So there's a lot of these things. You know, a good example here, and again, I think that this one's big enough that it's worth pointing out. Just a good example of this, the Bitcoin Standard Treasury Company, which is Adam Back and Blockstream, they've seeded that with 30,000 Bitcoin. They didn't buy 30,000 Bitcoin. They already had 30,000 Bitcoin from many, many years ago. They've moved it from the left pocket to the right pocket, and it's easy to look at that and say, oh, look, 30,000 Bitcoin worth of buy side, but it's not. It's just kind of coins moving from one guy to another. So you're really looking at long-term holder supply going to another long-term holder supply of the same guy, just a different legal structure. So there's a lot of that kind of stuff that goes on. There's a lot of companies experimenting because this is my challenge with treasury companies. The more of them that there are, like shitcoins, and I'm not saying that they're shitcoins, some of them are, but not all of them. Like shitcoins, when you print 1 million of them a day, there's literally not enough money to buy them all. So the premiums must compress just simply as a factor of dilution. Then you end up with a Pareto distribution, as we often do in markets. You get a handful of big ones, and you get a long tail of shit ones. That's just how markets work. Now, the shit ones have a penny stock-like behavior where they can rally really hard. They can see premiums expand. Metaplanet is the perfect example of moving from the long tail to the left tail. They have grown and shown that they can continue to accumulate. They are continuing to stack more and more Bitcoin. They're continuing to get bigger access and more markets and able to do debt, and they might do preferreds. What's happened to their MNAV? Gravity is always towards 1 because the bigger you get, the harder it is to grow. If your strategy, he has 660,000 Bitcoin, how's he going to get to 1.2 million? That's what you kind of need to justify an MNAV of 2. But at the same time, he also has a full warehouse full of tools that he can use to keep buying. So yes, his premium may not be as big. Strategy's premium may not be as big, but he's also able to buy. When these little treasury companies, when they see their premium go to 1 or below 1, in Australia, we would call it up shit's creek, because how on earth that all they can do is sell equity. They have no debt market. They have no preferreds. They have no tools. So they're out there with just like a little spade being like, well, how do I dig this giant hole and build this fortress? I can't. And once the investors realize that they can't restart the engines, they're kind of going to realize that they have to sell the Bitcoin to buy back the stock to get their MNAV to go higher, because they have to for shareholder duty. So my view is that this long tail of treasury companies, they really need Bitcoin in a ripping bull market to see their premiums expand. If your premiums don't expand, or you prove yourself like a Meta Planet, and I put them they're in the maybe bucket, but they're really one of the only ones in the maybe bucket. There's a lot of not even remotely close to maybes. And the gap between maybe and Sailor is astronomically big. So Strategy's got their own challenges, but they also have a toolbox. Metaplanet's got some challenges, but they also have a toolbox. All these other companies are equity dilution machines that really don't have any tools at all. And once that tool goes away, they're in deep trouble. And their investors are going to have a hard time. So, this is the risky game that people are playing. There's going to be some absolute moonshots. And some people are going to give it all back because they go and speculate further on the risk tail. And just like shitcoins, like there's a point when the music stops and then it's just all over.
Just a few seconds to remind to our listeners that this podcast is sponsored by BitVault. BitVault.sv. I invite you to head over to the site. It's the first Bitcoin wallet solution to solve the problems of physical attacks and hacks, thanks to our time delay over multi-sig technology. The beta is for free, coming out in October. I invite you to head over to the site and leave your email to get notified. Thank you very much.
I fully agree with that analysis that the companies really need the right tools to defend themselves, to make use of opportunities, and to lever up or delever when needed. That brings us to Stretch. The newest preferred from MicroStrategy or Strategy now officially. Sailor was talking about during the earnings call about a leverage ratio of 30%, and some quick math. They're now at 14%. I mean, they have $15 billion to go with Bitcoin at the current market price. Like $15 billion at $150,000 per Bitcoin is another 100,000 Bitcoin for Strategy, maybe. He called Stretch like their iPhone moment, because they found a really, like, if we look at the market cap of Tether, it's, I think, $140 billion. And they basically did not entirely the same, but they basically issued a kind of stable coin with 9% yield. So, and I think they're gonna build out this Bitcoin-backed yield curve that they also going to issue like 6 months or maybe 1 year or 2 years variable dividends, but with a fixed price of around $100. So that could lead to, I mean, 15 billion on, if we look at the total stablecoin market, it's 240 billion dollars with Circle. So I think that's not unprobable, right?
Yeah, and the other thing is that, like, if you just think about, like, beyond the stable coins, he's going after money market funds, and this is the thing. At the end of the day, what are they actually doing with these preferreds? They're issuing bonds. And this has been one of my long-term views about treasury companies. There's two things that I think are really important. In my mental process, when I have an idea, and the first idea I had was that MNAVs go towards 1. Gravity is always towards 1. That doesn't mean they equal 1, but it means the company has to fight tooth and nail to get away from 1. Its gravity is towards it. And I came up with that view when I first started studying strategy. And as I find a view, I then test it. I shitpost on Twitter and see what comes back. I write about it. I think about it. I try to test it in the market environment. And when I keep coming back and saying it just keeps happening, it starts to build my conviction that it's probably on point. So the gravity towards 1 is a real thing. And the other one that I have is that the product is not the treasury. This is what I think a lot of treasury companies and certainly investors think, is that the more Bitcoin, the more product. No, that is not the right way to think about it in my view. The product is the means by which you accumulate the Bitcoin. And what I mean by that is The product is the thing you're selling to the market to gain the capital to buy the Bitcoin. The Bitcoin is the outcome. It's the means to an end. So what is Strategy doing? And if we really wrap it up in a nutshell, they're issuing bonds. They are tokenized in the form of preferred stocks, but they are functionally bonds. They are issuing bonds that are very attractive to the market, 10%, 9%, 8%. These are all attractive yields in a 4% world. So the yields are attractive. And then the idea is that as Bitcoin appreciates, you have issued this fiat denominated debt at the current cost basis. Bitcoin goes up, suddenly your debt ratio goes down. Now, it does require Bitcoin to go through bull cycles, but even if we get short-term weakness, I'm still a giga bull. I still think Bitcoin has substantially higher to go. So therefore, that actually makes sense if you can survive. And that's where I think Strategy is in a whole different world. And Stretch, it makes sense, right? If he's doing a money market fund, there's I think I saw like 7 trillion or some stupid number currently sitting in money market funds. The banks don't pay anything. The banks give you 0.1% if you're lucky, right? There's some banks here. I talk to some people here in Australia and they're like, oh yeah, my bank's only paying me like 3%. It's not hard to find a bank account 5%, but people are stuck in like 3%, 1%. Most of my like normal just transaction accounts like 0.1% or 0. And this guy's issuing 9%. And if he keeps paying those dividends, yeah, people are going to stick money in this thing. And then if people stick money in this thing, he can sell more of it. So the product is the bonds, the Bitcoin is the result, and it allows him to continue to sell the product. So it's a very interesting model. But again, I just don't think a lot of these treasury companies they don't have the scale, they don't have the size. Most of them can't tap debt markets. So like you got to run as hard as you possibly can to get out beyond escape velocity, because when the Bitcoin bear market comes in whatever form it comes in, could just be another period of chop solidation. It doesn't matter what it is. The steam comes out of these things real quick. So you've got to get past that like massive barrier. And Saylor has really shown how big you need to be to do this. It's just monumental.
Yeah. So I totally agree on that. And so before I'm gonna hand it over to Alessandro for the last questions, I want to ask you. I know you follow macro economics. It's not your field of expertise, but I would like to hear what you think about, because later this week we have this grand meeting in Jackson Hole, Wyoming, and we had some weak. Like the labor market is weaker than we thought because of the revisions. We had a lukewarm CPI, but a very hot PPI coming in. How are you looking? Because in your writings, you sometimes refer to check the hodler and sometimes check the analyst. So I think check the hodler don't give rat's ass about the Federal Reserve, but maybe check the analyst does. So I want to hear about that.
Yeah, it's interesting actually. So check the hodler is actually more of the macro guy. And the thing is, so macro, the way I think about macro, I love studying the economy. I don't spend a lot of time dicking around with numbers and trying to work out PPIs and CPIs and all this stuff. I still find it very funny that in the finance world, the most important market in the world, which is bonds, they still all have to plug in the bullshit CPI number because that's like the Schelling point. That's what everyone else does. So it's so funny that they all know inflation's bogus, but they can't pick another number because it's the number that everyone else is using. I think it's hilarious. So check the hodler. The reason why he studies macro is actually because it tells me where the wind is blowing and will eventually blow. I know that sometimes the wind's going to come out of the sails, and sometimes he's got to wait for the next gust of wind. He's just sit tight. As we said before, how many bear markets you have to go through to know to just do nothing? It's the best option. So check the hodler actually likes macro because he doesn't really care about what the outcome of it. He knows the end result. And in the immediate term, as you said, I truly think about these high rates, and I know that the economy keeps going in the US, and I know they're going to spend a lot of money and all that stuff, but something I've definitely learned about macro, you can have an idea of where we're going, and it can take 2 years to get there. It's very obvious it's going to happen, but it takes 2 years for the forces to actually occur. I can't see how there's huge parts of the economy that I'm like, it doesn't make sense. Australia, I look at our housing market and I just like run the numbers on some simple, like what it would take to buy a house here. It doesn't work. You have to pay yourself so much that the marginal tax rate means that you're like paying 3 times more for the house. It doesn't make sense. And whilst it doesn't make sense today, I think it just takes time for that to like filter through. So there's huge parts of the economy. I'm like, I don't know how they operate at these rates. I really don't. It doesn't make sense to me. It can just take a long time for it to hit. Tariffs. What is the status of tariffs? Who knows? I mean, the LLMs get it confused because there's so many changes. But at some point in time, those tariffs are going to hit the consumer wallet, and it's just going to slow shit down. So in the next like 6 months, I wouldn't be surprised if we get some like headwinds. None of this stuff would surprise me in the least. But the thing that I keep coming back to in my own mental process, they brought in the richest man in the world and his team of boffins to go and cut spending. And he was out in 5 months. Like, it took 5 months for them to realize that they're now using the term grow our way out of it, which is code word for we have no choice but to just go run it hot. So they're going to run it hot. And if for the audience who are still listening, if we do get headwinds, if we do sell off from here, if we do chop solidate for 8 months, the best solution is to do absolutely nothing and just wait, because they have no choice, right? Lynn Alden's Nothing Stops This Train. There may be periods where they try to put the brakes on. There may be times when the rails start to get a bit rickety, but the train must keep going. They actually don't have a choice. So you just got to ride the wave, and it will be a wave, but like sit tight, guys, because like the richest man in the world couldn't do it. It took them 5 months and they've given up. So they're going to print the bag, and you just got to sit tight and hodl on.
Got it. Thank you.
Thanks, James. First, one comment on you said if people are still listening, we have more than 3,000 listeners or watchers in X. So great success.
Good stuff.
Thanks for great stuff. Yes. One comment on your topic from the treasury companies. I agree. There could be a risk in case so the market is going down. The market will go down. Probably the steams then will come out. But I think also it could be beneficial for many because when in terms of human psychology of diversification or do something, when I explain Bitcoin, I say, okay, I studied a lot of hours, this, and this, and then we come out with the same simple and boring strategy, buy and hold. And sometimes I see a response, just it, only that, it's too simple, too boring, it cannot be like that. And because they are used to financial advisor who talk about PA ratio, emerging market, 3% on that, a bit of pharma, they sound super smart. Maybe at the end they have 20% of ROI and we have 100% just buy and holding. But for many, it's still hard. And in fact, we saw that last cycle, they move a lot of energy in altcoin. And now at least they have the chance to do something else with Bitcoin treasury companies. So this could be also beneficial if there is still this need to do something in many humans. At least they do with Bitcoin things.
Totally. Yeah. No, that's a very, very real thing. You see it a lot in the crypto world. They're like, oh, but you can't do anything with your Bitcoin. I'm like, yeah, I know. That's the point. That's the whole point. It's like, and this is the thing. Just because you're doing stuff with your investment doesn't mean it's going to do well. And look, I've tested this in a live fire exercise. I've tried my hand at stock picking. I'm like, okay, I'm a decent Bitcoin analyst. Why don't I try and like find some other assets? And like, oh, this mining company looks good. Every single time, literally without fail, I have tried doing this. I have, at minimum, massively underperformed Bitcoin, but generally I've lost money. Like, you know what I mean? Like, I had a great trade. In fact, the first stock I ever bought was in a silver miner, a speculative silver miner. And I won't go into the details. I was reading this book and like it had the perfect chart pattern and everything. And I bought it like a penny stock, 4.2 cents. And the thing suddenly ripped to like 30 cents, right? And then it spent 5 years going between 30 cents and 15 cents, just going absolutely nowhere. And I was looking at this thing, and this is, by the way, I would have bought this in 2018 when Bitcoin was like 3K. Lord knows what that money would be worth now if I had not bought this penny stock with it. Now, I still made like 200, 300%. But then it was like, I don't know, 6 months ago, I'm still holding this thing almost for sentimental value. And then they get some like, they're like literally on the cusp of opening, like starting construction on the mine. and then they get some like land claim or some legal challenge, and suddenly the whole mine goes to zero. And I'm like, what on earth is this? What do you mean I've held this thing for like 6 years? I've got wrecked versus Bitcoin. It was the right trade. Silver's doing great. The mine should happen. And then some legal thing comes and just blows you up. This is the problem. This is why people buy like the Mag 7, because they're like, I know they're not going to explode. They just buy the biggest companies in the world because everything else is a risk. So here's another example of this. My co-founder and I, we were vibe coding and playing around with this DCA strategy tool, because obviously I talk about metrics all the time, and in many ways, you can build 1,001 trading bots and algorithms and shit to try and buy the exact bottom, sell exact tops, blah, blah, blah. We benchmarked like perfectly timing, buying the bottom and selling the top. We perfectly timed it all. We structured it all out, and it beats like daily DCA by like 5%. So you've got to build all this complicated infrastructure and do all this complicated shit. And if you just daily DCA, you're just an unbeatable machine. And people don't believe it, but it's just unbeatable. It just keeps chugging away. And what happens is over time, the stats are on a daily basis, Bitcoin goes less than 1% in either direction 40% of the time. 30% of the time it goes down more than 1%, 30% of the time it goes up more than 1%. So the reason why day traders get wrecked is because if you go long, if it goes sideways, you get eaten up by funding rates. And if it goes down, you lose. So you've got a 30% chance of being right. It's way worse than a coin flip. If you go short, it's the inverse. It's got 40% chance of going nowhere and 30% chance of it going down. So you get wrecked as well. So day traders get wrecked. But then if you do that on a quarterly basis, you get a massive positive skew. The market wants to go higher over quarters. And then occasionally you get these big 100% quarters. And this is what I think a lot of people don't understand. If you run, and I've back tested this, if you look at all the previous cycles, remove the 10 best days. So in your spreadsheet, just remove the 10 best days and make them zero. You don't make any money. Bitcoin is literally flat or down if you remove just the 10 best days. So what that tells you is that those 10 good days, if you're not on board for them, you don't have a cycle. You could lose money versus the price if you just miss those. And this is what people day trading miss. I'm going to sell here and buy back later. If you miss that green candle, that's over. You just lost like 30% of the entire cycle's returns, gone. Now, if you miss the 10 worst days, which is what people fear, they fear missing the 10 worst days. You actually you go from like being up 800% to being up like 1,200%. It's like, okay, but you're sacrificing the risk of missing the 800 and getting a zero. Just sit tight and do nothing. So yes, a lot of people want to trade. Yes, a lot of money managers want to clip the ticket and take a fee. But like at the end of the day, buy, hold, and be there for those 10 days because you don't know when they're going to come. And here's another thing on this topic. It is proven psychologically that pain to the downside, so taking a loss or watching an asset you bought go down, is less painful than an asset that you wanted to buy going up. FOMO is far, far more painful for people to experience. And what ends up happening, and by the way, when we go into the full-scale euphoric top, which I think will happen at some point, the way that people get really wrecked is they sell, they execute their plan, they go, I'm selling here because it's overheated, and then the market keeps going. And what do? They buy it all back in. And then they get wrecked because they trade all of the gains that they just made. They buy the top in FOMO. Then the market comes down and it wipes them out completely. Happens so often. So if you do sell, have a plan, write it down before the market starts ripping, and do not invert your plan once you've executed on it, because that's how people get truly wrecked. Otherwise, just sit tight and enjoy the ride.
Agree. Totally. I remember also the last bear market, Bitcoin went from 69 to 15.5. And for many people, still not enough. They were waiting for 12K.
Agreed.
It was like minus 80%. Like how much should go down? Yes. Great. Thanks for the. Also, it's great that this insight is not only coming from a Bitcoiner, but also Bitcoiner who is also an expert in Onchain Analyst that helps us how to interpret the market, but the importance of a buy and hold and daily purchasing or regular purchase, let's say. Great. My last question will be on related to the future. Which will be for you the biggest risk on Bitcoin, and in particular the risk that could trigger the next bear market or similar to bear market, like a minus 40-50% downtrend, if we will have?
Yeah, I don't know if it's treasury companies. I think they can create a lot of upside, but I also I don't know. I kind of think a lot of the steam's already come out of it in a way that may not go back in. So that would be kind of interesting, actually, if it was just like a short-term meme coin thing that's kind of already tired and dead. I think strategy is going to be fine. I think some of them are going to be fine. I just don't think the long tail are going to be fine. So I'm not so convinced that that's going to be a problem because once you go down the list, like you get rid of the top 10, they're very small. The market can handle that kind of volume. We saw 80,000 Bitcoin get sold. The market went down 3%. We can handle the whole sell side. It's kind of irrelevant. So I'm not too concerned about that. Leverage is still a big thing. Leverage is definitely a big factor right now. We're seeing a lot of people betting on, speculative futures and perps and stuff. So that's definitely a factor. It will contribute for sure to the bear. In terms of more long-term risks, I think there is still a risk. Probably the two big ones that stand out to me. One is a technical side. How does Bitcoin adapt moving forward technologically? We've obviously seen a lot of fracturing in the Bitcoin space in terms of, inscriptions and ordinals and spam and all this stuff. People disagree on what we should or shouldn't do. There's, different views on different core devs and how that all works. I think there's a risk that we kind of over-index on shit that doesn't matter and then ignore stuff that's really important because we're too busy fighting over red team, blue team. I think that's a risk. And also this gets much harder the bigger Bitcoin gets. And there are real risks out there that we need to technologically update for. If we're not able to, that's a challenge. So that's a technical side. And I also would just say the Wall Streetification. There's a risk that we just become another gold. And whilst I think Bitcoin's price will be much higher, do we kind of sacrifice the freedom technology for it? Privacy has always been a challenge for Bitcoin. I don't think that's going to get any easier. So I think that side of do we lose the ethos of Bitcoin? That's why I think Bitcoiners are really important. And that's part of the tweet that we opened with. Bitcoiners who have been through these journeys, they know that it's worth fighting for. And I think there's a lot of things that if we just Wall Streetify. Now, I also disagree that just because the ETFs are big and just because Wall Street's here, that it's been captured. I also disagree with that take. Sure. I just think that there's a gradient spectrum. And I think the natural tendency for people, humans, the natural tendency is that we want convenience and we will sacrifice things for that convenience. This is why none of us run our own email client, because the convenience of giving all our information to Google is just much, much easier. So we all make these trade-offs. But Bitcoin is one of those few things where we have to actually say no and push back. And in a way, both of these are linked, because if we start making technical upgrades and things that we need to do for Bitcoin that run contra to what Wall Street and these guys might like, the challenge is we need to hold firm and say, no, you follow our chain. You want to hold our asset, you follow our chain. So that's where that side becomes really, really important. So I don't really know what it looks like in terms of the bear market. I thought the Treasury company would be a big factor, but I think they're going to fizzle out much quicker than most people think. So yeah, we'll have to see. But I can't quite structure the 80% drawdown yet. We kind of need to have the rocket fuel upside before I can structure that.
Okay, thanks for the explanation. Also on this bear market, it doesn't feel at all that we are at the top. Also, it's last week we had new all-time high. Every time it's the new quietest all-time high ever. Anyone who is not in Bitcoin yet at the moment doesn't care. 120, 125, probably 150 or 200. So likely if we have this minus 40, minus 50%, it will be after a real bull run that at the moment we don't, even if Bitcoin is up, it's up in a more structured and steady way.
Totally.
Yeah,
Thanks.
I agree on your take that Bitcoin Treasury companies. It feels like it's almost too much consensus that they will be the trigger of the next bear market. I heard from Jeff Walton at the Hurdle Rate podcast that they asked in a crowd who owned Bitcoin Treasury companies. 80% raise their hand. Then they asked, how much of you do think that Bitcoin treasury companies will be the cause of the next bear market? And also 80% raise their hand. So I'm feeling like there's almost too much consensus that this will be the trigger. So, and I agree that I'm glad that this topic is spoken about in a lot of podcasts, because maybe we can prevent that from happening by rational thinking and by subscribing to your Substack. And
here's another contrarian take. We're going to have the 80% correction. It's just not going to be in the underlying. It's going to happen in all those stock tickers. That's what's going to happen. The pain of downside, in my opinion, is not going to be carried by Bitcoin holders. It's going to be carried by Bitcoin companies' shareholders. That's how I think the maximum pain comes. Like, you can still get the 80%. It just won't, it'll be NAV compression. You know what I mean? So like, where is the pain showing up? This is just some of that stuff to think about. So max pain is if Bitcoin keeps going up, except the stock prices don't. That would
hurt. That makes a lot of sense. I think Metaplanet is down 60% in the last 60 days or something. So that's
the better performer.
Yeah. So and also on Alessandro's point, like Bitcoin, I think I saw. I'm looking at Bitcoin versus gold a lot, and I think the latest all-time high was bouncing off the 2021 top, like 37 ounces of gold. And I think my gut feeling is that we need get to a higher new all-time high in gold before we really see a cycle top. So
agree.
I just want to thank you for your time, James. Where can people find you on the internet?
Yes, thanks, gents. Thanks for having me on. You'll find me on Twitter at _Checkmate, and you'll find us at checkonchain.com. We've got a newsletter and our charting site, which is, by the way, is free. So if you like Bitcoin charts, we've got too many of them. So it's a good problem to have.
Thanks.
Yeah, and I want to say, I really recommend you subscribing to James's Substack. I'm a subscriber from the beginning, and he's a masterful writer. And the one thing I wanted to tell you is I like it that you know your articles because you always refer to a title. You really, I know. Listening to you and reading that you really put a lot of thinking into it, and it always gives me something new to learn. So I mean, I'm a great fan. So thank you.
Oh, thank you. No, I do. I sometimes I struggle, and like I'll be saying, I think it was this, but like I do tend to remember the piece, what the theory was, because this is the thing. The newsletter is actually me formulating my ideas. It's my playground for like testing ideas, seeing what comes out. Putting an idea out there, letting it sit for a couple of weeks, coming back to it. And it's this constant learning journey. And like, that's what I think is what I try to write, is to make it engaging so that I bring everyone along for that learning journey as I'm trying to work it out, because it's a weird space. There's constantly new stuff to work out. There's new metrics and tools, but like at the end of the day, human beings, we're always going to do the same thing. Fear and greed is just such a masterful thing on our minds. We're still monkeys back at heart, right? And our brain still does exactly what a monkey's brain does. You get greedy, you go after it too hard, then you feel pain and you make decisions accordingly. So really, we're just anchoring to that single constant in markets and just seeing where it takes us.
So from my side, thanks a lot to James for the conversation, for the interview. I watched you in different podcasts, and finally it was great to have you in the podcast, so we made the interesting questions on how the market is going. And thanks for the many insights. I think many, especially the new Bitcoiners, but also new joiners, are very interested on all your insight that you shared in this episode.
Good on you, lads. It's been a pleasure.
All right. Thank you, James, again. Thank you.